In June 2025, China made a bold move by extending its Cross-Border Interbank Payment System, or CIPS, into Africa. This expansion marks a significant milestone in the evolution of global finance, as it brings a new level of connectivity between two of the world's fastest-growing regions. This isn't just a technical upgrade, it's a strategic leap, allowing African banks to connect directly with China, bypassing traditional Western financial gatekeepers. For African financial institutions, this means faster, more secure transactions and a direct line to one of the world's largest economies. For years, Africa-China trade relied on US or European banks, adding costs, delays, and risks. These intermediaries often complicated transactions, making cross-border business less efficient and more expensive for African companies. Now, with major African institutions like Afreximbank and Standard Bank joining CIPS, direct trade and investment in Yuan is possible. This opens up new opportunities for African businesses to access Chinese markets and capital without unnecessary hurdles. This marks a new era. Africa is no longer just following global trends but helping shape a new financial order. The continent is asserting its influence and taking a proactive role in redefining how international trade is conducted. The move streamlines trade, reduces dependency on the dollar, and gives African nations more control over their economic future. It also encourages innovation in local banking and payment systems, fostering greater financial independence. It's a clear signal that the global financial landscape is shifting, with Africa and China building a powerful new bridge. This partnership is not just about money, it's about trust, collaboration, and shared growth. As this partnership deepens, it promises more balanced, resilient, and interconnected global commerce. The benefits are expected to ripple out, impacting industries from agriculture to technology, and creating new opportunities for millions. The world is watching as Africa steps into a more active role in shaping tomorrow's financial architecture, signaling a future where emerging markets have a stronger voice and greater influence on the world stage. To understand China's move, let's first look at how money moves across borders in today's world. Every day, trillions of dollars flow between countries, businesses, and individuals, connecting economies and shaping global trade. For decades, SWIFT has been the backbone of international finance, a secure messaging network that banks use to authorize payments, most often in dollars or euros. It acts as the invisible infrastructure behind nearly every cross-border transaction, making it essential for global commerce. But China's CIPS, launched in 2015, goes a step further. Unlike SWIFT, which only sends payment instructions, CIPS can actually settle transactions directly in Yuan, streamlining the process for Chinese and international banks alike. This reduces the need for costly, slow currency conversions and reliance on Western-controlled systems, making cross-border payments faster and more efficient for those dealing with China. SWIFT, while technically neutral, is heavily influenced by Western governments and can be used as a tool of sanctions, sometimes cutting off entire countries from the global financial system. CIPS, overseen by China's central bank, offers a faster, cheaper, and politically insulated alternative for Yuan transactions, giving China and its partners more control over their financial flows. While CIPS and SWIFT still interact and share some infrastructure, the goal is clear. China wants to build an independent global network for Yuan payments, reducing exposure to Western pressure. As more African banks join CIPS, reliance on SWIFT for China-Africa trade will shrink, making it easier and cheaper for African businesses to trade with China directly. This shift challenges the old order and opens the door to a more diverse, multipolar global financial system, one where power is more evenly distributed and new players can shape the future of money. China's expansion of CIPS is part of a bigger strategy, making the yuan a true global currency. The world has long run on dollars, giving the US immense economic power. China wants to reduce its vulnerability to US policies and sanctions, especially amid rising trade tensions. By urging its companies to use yuan and expanding CIPs, China is building the infrastructure for global yuan adoption. The easier it is to use yuan for trade, the more attractive it becomes for China's partners. Each new bank joining CIPS increases the yuan's reach and utility. China isn't trying to replace the dollar overnight, but to create a multipolar currency world where countries have real choices. For Africa and others, this means more freedom to choose the payment systems and currencies that best serve their interests. The yuan's rise is about building a parallel, resilient financial ecosystem for a new era. With Afreximbank and Standard Bank now direct CIPS participants, Africa-China trade is being transformed. These banks can settle transactions in yuan directly, bypassing the old costly route through US or European intermediaries. This streamlines payments, cuts fees, and speeds up trade. Afreximbank's involvement means even smaller African banks and businesses can access yuan-based services, spreading the benefits continent-wide. For China, this cements the yuan's role in Africa's financial system and boosts trust in CIPS. The network is growing fast, with over 170 direct participants worldwide, including major Western banks. The addition of African giants signals to others that CIPS is credible and here to stay. The result, a more efficient, accessible, and inclusive financial bridge between Africa and China. For African economies, CIPS brings real immediate benefits. The biggest, lower transaction costs. No more double currency conversions means savings for businesses and consumers. Faster payments mean less uncertainty and better cash flow for African entrepreneurs trading with China. CIPS also gives African countries more financial independence, reducing vulnerability to US policy shifts and sanctions. Diversifying payment channels helps insulate economies from external shocks. Easier, cheaper, and faster transactions encourage more trade and investment, especially for small and medium-sized enterprises. The adoption of CIPS can deepen Africa-China economic integration and support local development. By lowering barriers, Africa can leverage its partnership with China for more resilient, self-directed growth. CIPS is more than a technical upgrade, it's a tool for economic empowerment. CIPS's expansion into Africa is part of a global trend known as de-dollarization, where countries are actively seeking to reduce their reliance on the US dollar in international trade and finance. Across the globe, nations are searching for alternatives to the dollar to lower transaction costs, minimize financial risks, and shield themselves from political pressures that come with dollar dominance. Geopolitical tensions, along with the frequent use of sanctions by the US, have made many countries increasingly wary of depending on American-controlled financial systems for their economic security. In response, China's CIPS, Russia's SPFS, and India's rupee-based payment initiatives are emerging as important building blocks of a new, multipolar financial order that offers more options for global transactions. The aim isn't to dethrone the dollar overnight, but to gradually create real choice and healthy competition in global finance, giving countries more flexibility and bargaining power. By joining CIPS, Africa is not just aligning with China, it's taking an active role and asserting its agency in shaping the future of international finance. Africa's vast natural resources, rapidly growing economies, and youthful population make it a key player in this global transition toward a more balanced system. Embracing CIPS signals a strong desire for greater independence, economic sovereignty, and a more influential voice on the world stage. This move helps distribute economic power more widely, reflecting the diversity and interconnectedness of today's global economy and opening new opportunities for collaboration. Africa is stepping up as a vital partner in building a more balanced, inclusive, and resilient global financial system for the future. The expansion of CIPS into Africa is a milestone in the shift toward a new global financial landscape. As more African banks join, the yuan becomes more attractive for trade, creating a network effect that could reshape regional commerce. China's push for advanced technology in CIPS, like blockchain, aligns with Africa's own fintech innovation, opening doors for digital trade. In a world moving toward distinct currency blocks, Africa's choices will help shape the balance of global economic power. By diversifying partnerships, Africa gains leverage and independence in a multipolar world. China's CIPS expansion is more than a technical change, it's a foundational step in building a new economic reality. Africa is not just adapting to change, it's helping to drive it, securing a stronger role in the 21st century global economy. The journey is just beginning, but Africa's influence on the future of finance is undeniable.